Hello and welcome to this week's episode for the Stock Market Update brought to you by Conservative ETF Investor. I am your host. My name is Ken, and once I get done with this video, I'll upload the link right here to our homepage at Conservative ETF Investor. The link to the homepage is also on the title of the YouTube video. There'll be a link there in the description for you. Okay, so that's in order for you to get to the homepage. The most important thing I want to bring up to your attention right now, scrolling down here on the home page, is our current posture for our positions is hold. We are in a hold posture for everything, and of course you can go through here and look at everything on our transaction dates, price of the transaction dates, current closing price, our profit and loss in each position, the last ex-dividend date, the dividend amount for the last dividend, that on a percentage, total dividends percentage of the previous dividends, and then the total return percentage, which includes all your dividends plus any profit or loss that you have in the position, and your beta of the portfolio, which represents how risky your portfolio is. So you'll see that the S&P 500 has a beta of 1. We're at a 0.59. So that's why it's a conservative portfolio. I do have one mutual fund in here, which is OSTIX, a 25% position, and that is because I cannot find a good ETF to replace that. So we're just leaving that one in place. How well has the portfolio performed? Well, since our buy recommendations, we have been up 12.24%, not including dividends. And since calendar year 2017, the portfolio is up 8.32%. So that's how well the portfolio has fared. You know how to get to the home page. Now we want to jump into our charts for our positions. All right, let's take out inspect mode here. We use the stockcharts.com for our charting service. And now let's show you how well everything is done. The charts that I like to use to look at the positions are 5-year time horizons, weekly charts, that's that word right there, weekly. These are candlesticks, so let me move over so you can see the thumbnail. Each one of these candlesticks represents 1 week of activity. This is a clear candlestick or a white candlestick, so we opened here at the bottom, we closed here at the top, whereas the red ones open at the top, close at the bottom. Same thing with the black ones. They open up at the top and they close at the bottom. All right, so anyways, and then all right, so that's it for that. Now, how well is the ETF performed? Well, the SPY, which is the S&P 500, has had a weekly gain of 0.23%. Here you can see that we're trading in this upward sloping trend channel. We've bounced off the bottom support line and we're coming up towards we're about the halfway point here. We've had, it's been extremely strong over the past few weeks. Scrolling down, we use 2 momentum indicators. The top one is the MACD, which is moving average convergence divergence at default settings. Here you can see that the MACD has reached a bottom and has crossed up above its signal line, which is a bullish activity when the indicator is above the signal line. Here is the slow stochastics indicator on the bottom, again at default settings. Generally speaking, when you're above 80, it's bullish, and we're at 98.37. The only thing I'm concerned about is if it's some type of a blow-off, because it's just been kind of explosive here. But again, hold positions on all positions right now. The next chart we're going to take you to is VEU. Now, VEU is the symbol for the Vanguard All World excluding the United States. Let's see here. Our position in here is a 10% portfolio position. It's traded on the New York Stock Exchange. It had a very nice week, positive gain of 1.78%. You can see this large candlestick. Let me move it over here so you can see it in the thumbnail, and you can see this beautiful week's action. Very, very strong bullish. Here, the slope of this is a really steep slope, which is of somewhat of a concern because this slope cannot be maintained forever. Eventually, this will break down below the support line, and it could be as severe as something like this, like a 20% correction. So we're always on the lookout for that. So right now we're still on hold recommendations because the ETF is performing well. Our momentum indicators down here, MACD is above its signal line and pointing up. Slow stochastics is above 80 and bouncing around. All right, so let's move on to our next one. VNQ. VNQ is the Vanguard REIT, which stands for Real Estate Investment Trust. It is paying a healthy dividend of 4.65%, which in this environment is a very good dividend. We had a positive week, gaining 1.79% for the week. Now, let me scroll over so you can see it here. You can see the beautiful week's action right here that we've made, making lower lows and higher highs. But we've been in this trend channel wedge pattern for some time now. If we want to go all the way back to here, since the end of 2016 is when it created its support line, and then its first resistance line that I have captured here is somewhere in January, February of 2017, probably February or March. So anyways, right about here and where it's created that. And each time it's come to this resistance line, you can see pop down, pop down, pop down. This one didn't even reach it. This one did reach it, and this one is right at it. So are we going to get another pop down, or are we actually going to get a break up? We are right at a critical point for VNQ. As a trader, I would sell here, and if it's going to get above it, I would let it get above it and then use that line as my support line or my stop loss line. As an investor, we are holding because we're closer with this portfolio, we're closer to a buy and hold portfolio. But as a trader, that would be a position to sell and rebuy at the support line and use that as your stop line. Looking at your momentum indicators, you can see that we've bounced around, but we're currently bounced off of the signal line and we're trading above it on the MACD. And on the slow stochastics here, we are above the signal line and getting ready to cross above 80. So this may have enough momentum right now to get above this critical point right here. So it'll be interesting to see if that actually happens. But we are very, very close to that point right now. Okay, so that is our VNQ position. Our last position is OSTIX, which is the Osterwise Strategic Income Fund, paying a nice healthy dividend, 4.63%. It had a flat week, gaining 0.0% for the week, so it's just been flat for the entire week. You can see how bullish this particular mutual fund has been, relatively speaking. The MACD is softening while the mutual fund has been advancing, and the slow stochastic has just been bouncing above 80 now since April of 2016. So it's just been very positive. You can see that here in the chart. Boom. It's just been a tremendous advance. From off the bottom here, just to show you how much that's advanced, off the bottom to here, that has gained 21%. So it's been an incredible advance since February of 2008, or yeah, February 2008, right in there. It's just been an incredible advance. Okay, two more charts to look at. The first one is the VIX. Now what the VIX is, it's a volatility indicator. So here it is, a money sign VIX volatility indicator. So basically it's a volatility indicator of the S&P 500. Now it's an inverse chart, meaning that when this chart goes down, the S&P 500, which I have a chart of the S&P 500 here at the bottom, goes up. And when this goes up, the S&P 500 either goes sideways or goes down. Generally speaking, it goes down. So when this reaches extreme lows, which we're getting close to that right now at 9.61, getting very close to a bottoming level here. And when you reach the bottom, the only place to go is up. And once that happens, the S&P 500 goes generally sideways or down. This has been an extremely bullish run, so the market is very strong, but that is somewhat of a concern. So that is on the VIX. The MACD for the VIX has bottomed, has crossed above its signal line, and is trying to travel up. And when it does that move and it goes up again, the S&P 500 is traveling down, so it's of somewhat of a concern. Last chart of today, VXN. Now the VXN is the same thing. It's a volatility indicator or index, but this one is for the NASDAQ 100, which the symbol for that chart would be QQQ for the ETF. Now this one here is trading. Oh, by the way, on both of these charts, the volatility indicators, no longer am I looking at the 5-year charts. Now I'm looking at 1-year charts, daily charts. You can see the word daily right there, so you know my time duration is daily. Each candlestick is 1 day's action, 1 day's trading action. Here I also have 2 exponential moving averages. The blue one is the 50-day EMA, and the red one is the 200-day EMA. So the blue is below the 200, or the faster is below the slow moving average, and the indicator is trading below both, meaning that it's going to drag that blue faster indicator down with it, creating a larger disparity. Generally, that's a bullish action. That's a bullish action for the VXN, again, because as this comes down, the QQQ NASDAQ 100 will travel up. I've got the QQQ chart down here at the bottom. And you can see as this indicator was falling this whole time, the QQQ, which is the NASDAQ 100, was traveling up. And then as it was bouncing around in here, you can see that was bouncing around here as well. But generally speaking, here you can see that when the MACD bottoms and rises, you don't get that much advance on the QQQ. But when the MACD tops and comes down, you'll see that you've got a greater advance. This is when you get your greatest advances in the underlying ETF. Here, the MACD was falling. It had already did its advance here, and then it moved sideways for quite some time, and now it's advancing again. All right. So again, this is my name is Ken, and this is the stock market update. For the week of October 14th, 2017. Sorry if I did not mention that at the beginning. And I hope you have found this video informative. Please click on like if you have liked it, and be a subscriber. And I'll see you later.